Good morning. Happy Monday. So a bit of a muted opening here. I was backing off from where they were. Shouldn't be too surprised, I suppose. Um, I think it would better this than what could have been an opening up here, a gap up, and enthusiastic to go higher. So where are we here? Really not much of a big deal. I'm just looking as I do, 390 and change. Where does that put us? Well, pretty much slightly up or unchanged, pretty much neutral to nothing going on here. Relatively insignificant resistance to the left here on the 60-minute of the spiders, but it was a pretty big run from the gap up from this consolidation. You can see the head and shoulders, kind of the bottom there, which in essence was pretty much 3 days of going nowhere, and then the push up on Friday, which was about an hour. As you can see, 1 hourly bar, and then it was dead until the last, 15 minutes or so at the end of the day. You can see it on the 15-minute chart. The one bar up was just like creeping. So maybe there was some shorts there, and maybe some options activity got that going in the last few minutes. So where are we going to go from here? Well, the big picture is down. You can see the downtrend, lower highs and lower lows, and things got extended to the downside, and it just popped back up. And just looking for the chart here. No, not that one. Daily sentiment. Here we go. Really not the way I wanted to display it, but so one of the things on a day like this to see is there really some power behind the move? And on the surface, you would say, of course, there had to have been. Well, it's not always that way. But looking at this last move up here, right, we saw all of these spikes to the top there above the red line, which is on a day-to-day basis. Those advancers minus decliners got extended, but that is exactly what you want to see. And we saw breadth get up to an extremely high level. And one of the comments, over here that I've made is that time kind of ran out in front of the inflation report, and what happened from there. And so it made the next little low as the internals reached an extreme. And now you can see breadth is up here, but it's not as strong as what we saw back here. But it really was only 1 day. So the question I was thinking over the weekend was, well, does it spike up and get a push up to the 50, which would really be confirmation of what happened Friday to get some real power behind, or additional power behind that move to be more convincing of the potential bottom. So that's not happening. Everybody's waiting here to see, what might unfold, whether this is like a 1-day wonder. And so one of my other thoughts over the weekend was, what, as much as maybe many want to see this go higher, to see follow through, I prefer, market is going to do what I prefer, but sometimes it unfolds that way. If we were to get a pullback from here that didn't follow through, we got some economic numbers coming out this weekend, to get something more like this, where you get a retest and maybe even a new low reversal, which could really, empower a much bigger move. We are far from the 20 MA, very little. Well, yeah, but as we always say, McGraw, moving averages are subjective. We like them for different reasons. We call them visual aids, but the 20 MA isn't real price resistance. So, this was close to the 20 MA, but that didn't stop it from spiking higher another day. But this decline here was much more powerful than this one. So kind of climactic, which is what you want to see if you're thinking, hey, this is the end of this move to the downside, that things got climactic, and then making a bottom. Ideally you get some kind of a retest or maybe a lower low down here. And I think that could be what could be a really great buying opportunity, in the short term. And as far as intermediate term, we just have to see how it unfolds. So, and we'll see how this week unfolds, with these economic reports that are coming out almost daily. End of July, lower low. I mean, I would think that would be fantastic. I don't know that it happens at the end of July, but having this pull back, today's the 27th. So sometime in July, things coming down could be 3,600, maybe a little bit more. I don't know. But what we would want to see is that pull back and then see these internals, making a little bit of a higher low like they did here on the breath, as that moved lower. Breath actually showed some improvement there. So, we'll see. I mean, right now, trend is down. There's still a void above. Maybe you can get a push up here between the 20 and the 50. The 4,000 is a big level. I'm just saying there's a big open interest there. Big volume at 3,900 and 3,910. So, we'll just see how today unfolds, whether it's just wind up being a consolidation day after a wide range bar up. And the way things are here at the open and backing off, I think that's reasonable to think. Maybe it comes in a little bit where it really doesn't do much damage. It doesn't go up much. And so with that thought in mind, and then looking at, the option tables, I came up with, I think, which could be pretty good for an iron condor today. 4,005. I don't think it's getting up to 4,005. If this would have been ripping here pre-market, gapping up, and then maybe it could have went. And right. So you're saying durable goods were better than expected, which that puts, I think, a little fear, in institutions to think, well, if it was bad, well, the Fed's going to back off. Now that's better. And so now we've got other reports coming out this week, that is like, if things are worse, right, the Fed is going to be less aggressive. But if things are better, they're just back to like, hey, we're going to have to, like they say, they're totally committed to, knocking this inflation down and price stability, right, which means controlled inflation. All right. So 38.10, probably a no-brainer, Jacob. I wrote down 38.20. And these lines here from last week, but so 38.20 is at today's low, Friday's low. Now, we think of what's reasonable day to day as far as movements go. Now, anything can happen. We all know that. But to give back all of Friday, and this report came out and it didn't crush the market, the durable goods, it didn't crush the market. So, 38.10, 38.20, whatever down here, I think it's unlikely it's going down there. I think there'll be buyers. There should be buyers. But in reality, it shouldn't even get close, because the more it dips into Friday's range, the more traders are going to be, this is not what's supposed to happen. They're going to lose a little confidence. So, look, in reality, we should have a trading day that is above the halfway mark of Friday's range, which there's nothing there, but it brings in the idea of creating support. So pullbacks after a day like this, to gap up and move, buyers should, for whatever reason, think, hey, I should be a buyer on some kind of a dip, and they begin to create support like this did. This created support. So it made pivots where there was nothing to the left. But getting down below 38.70, it opens up the door to the void below. So buyers have to step up for whatever reason and defend that. But to think it's coming all the way down here, something's really, really wrong. And that's the essence of any trade we get into that isn't working, where, hey, I didn't think that was going to happen. Something's really wrong. And should it get up here, I think there's going to be plenty of sellers if it could get up here. So the idea of an SPX iron condor, I think today it makes sense. All right, look at other markets. Are they doing anything? NQ's up a little bit, drifting back, had this run, really nothing much happening there. Do buyers want to come in and, get things going to the upside? We'll see. I think when things are in a downtrend as they are, I'm going to tell you that buying breakouts, even intraday, most of the time doesn't work, right? You get blindsided by that. Whereas the apprehension of the downtrend, but thinking that it can go up in the short term, more institutions or hedge funds or day traders want to buy dips than trying to buy strength. So got room to go up a bit, got room to go down a bit. I think more of a go nowhere kind of a day. As we look at other markets to see, are they giving us any insights? There isn't much of resistance there, but it is something to the left. Still the 20 MA being subjective. That's right there. It's banging its head on that. Can get somewhere in between. I don't think it gets much further than that before sellers want to become more aggressive. The Russell couldn't even get to the 20, still showing some relative weakness. It's one of the ways we measure relative strength and relative weakness with moving averages, even though they're subjective. This came down real hard. And so kind of the breakdown bar failure, this is what I talked about 2 weeks ago, this possibly happening. It cleared a little resistance here. It's got room to go up. Let's see who wants to buy the dip. All right. And now Bitcoin, I was surprised it didn't make a larger move up while the markets did on Friday. And that was like, is that the fly in the ointment to the bullish case? Now, that was a monster wide range bar, but looking at the weekly chart, but it happened after a big move down to 30,000, and it went sideways and it couldn't bounce, which is bearish, and it gets crushed. And now it's going sideways at the bottom of the wide range bar. There isn't much support here. It's a psychological 20,000 level. But if this starts to break, I think the markets fall back and that July low scenario starts to play out. So far, it's doing nothing today, but you certainly want to have an alert on some kind of Bitcoin futures or Bitcoin whatever to see, are they moving down? And if they're moving up, that adds to the bullish scenario short term. So if we see Bitcoin beginning to move up, say intraday, the VIX is moving down, right? So this has come down to support, kind of, which looking at this chart, more like, hey, this is likely to go up, which isn't good for the markets. And so we're looking here this morning, like, which way is it going to go? Looking at different instruments that might give us some guidance. Now, one of the things I mentioned in the letters over the weekend was, hey, we got this big day on Friday. Interest rates were coming down. They're in an uptrend. It's in a buy setup. And here they are opening higher. That's probably part of the hesitancy why there isn't much of any follow through to Friday in equities. Now, this continues to push up. The 10-year continues to push up. Well, there's the inflation concerns. Now, as we look at other things, right, you can look at the 5-year, it's moving in the same way. But one of the so-called, inflation is coming down, the economy is slowing. Granted, copper got crushed, but it's extended to the downside and this is moving up. So look, as traders and institutions look at different intermarket relationships for some guidance for today. If interest rates are pushing up, copper starts recovering, Bitcoin starts moving down, I think that puts a lid on those that want to press the button on the long side. Yeah, so McGraw saying that there's bond auctions today, and of course the bond traders will be, looking at that. But I guess bonds, with interest rates this high, bonds have to become a bit more attractive. And I don't know. We'll see. We're all looking at different things to give us guidance. When there's a clear path, either up or down, and the prices aren't extended, well, it's pretty, clear cut as to what side to be on. Crude oil, they had a big dip. It's stabilizing here. So if interest rates are inching up, crude oil starts inching up, copper starts inching up. The VIX is inching up. That's going to put a lid on the upside, which, and then unless Friday just falls apart, that move, who's going to want to short this either? So back to, a bias of we're not going to probably go much of anywhere today. And let's see how it unfolds. Silver, bouncing up a little bit. Gold not doing anything here. And, the dollar, have pulled back here. The dollar starts moving up. That's kind of like, all the other bearish things. But you can see how the momentum slowed down, the distance between the highs there. So, a lot of things to look at, a lot of things to decide, to do anything. But chart of the week that I wrote a week or so ago, what's working in the market? Credit spreads, which leaves directionally, other than intraday, out of the picture for the time being. Well, yours, Dan.
Good morning. Yeah, we had a great week in put spreads. I have a bunch of nice open ones. John, yeah, I'm confused what you're asking me. Today's June 27. So why am I concerned of a month out? So yeah, we have a put spread in Tesla. I gave it as a long. The gap's probably gonna mess it up. Let's see that was a beautiful charts here. Look at this beautiful bottoming pattern, retest on the weekly. I don't know. I like you double checking me. That's a beautiful gap from an end of day base. So I don't rather not have to deal with a gap. I'd rather have it just open flat and then take out a 5-10 minute high. But airlines popped a lot. We did a couple put spreads into the close. Jets, there's airlines everywhere that had nice close with a price void. I'll be looking at a couple more put spreads on those. Cruise ships had a nice day. Some rebounds in hotels, tourism, etc. So all our opens are fine. Just glancing over here. We're actually long calls on Amazon. I tightened the stop under this closing WRB. But that was a nice reversal on major support. That was a beautiful trade. I just set my alarm. Carvana go off. Why did I give Carvana a long? I'll tell you why. It's a bottoming pattern, daily, weekly, monthly. And secondly, the cover story of Barron's. Cover story of Barron's was bearish. Here, I'll just give it to you all, even though you're not in the letter. If you are not a subscriber, you didn't get the weekend letter. So you don't get our weekend trades, you only get updates. And so look at my big note here. Barron's cover story is bearish, big, huge bearish article on Carvana. His troubles aren't over. So it will only trigger if it's strong and ignoring the news. And that's exactly what's going on here. So that, keep an eye on DWAC, the old Trump stock. I think that, wow, this got killed recently and can't bounce. That's a continuation breakdown, but for the ugly gap today. So this, I think I was reading that all the boards of directors got letters from the DOJ or something or other. That's not a good sign. You just, Greg and I both own brokerage firms in the old days. You do not want the government on your back. I mean, they're not there to help you, and they have unlimited resources. So having the DOJ writing you letters, pretty unpleasant. 30 AXSM, this gap so big, it kind of looks like it's a drug-related thing. ARC, it's Thomas, it's up 5 days at a prior high. I mentioned that in the video. There's a lot of beautiful weeklies out here with price voids. So I mean, look at Team is a better W bottom. But the problem we're going to have now after a multi-day run is getting on board these. I mean, actually, I gave Team as a naked way out of the money put because it's way the heck far away. I forget what strike I gave. I'll have to go look at it. But these I don't mind doing, but I can't buy Team here. I think Goldman gave it an upgrade today. LI. LI I gave as a bear call credit spread. I was watching it long for weeks and I never got a good entry, but now it's a Climo, gapping down. Put that in. I have an alarm set, but I'm gonna put it in a window. Cruise ship, there was an article in today's journal talking about, they still have a debt problem. They all had nice bounces on Friday. And I think I gave Norwegian, but we never got filled. Etsy has a downgrade, no pattern. Hood, Goldman downgraded, saying they still have troubles. Sell setup and gapping up though, so no problem. I mean, no pattern. I did see Coin. Coin, they downgraded. I'll see if it can recover from this gap down because over Friday's high, like it was a put spread. And Goldman was, shoot, what did I read about them? They were actually in the news today doing something. That was a beautiful W bottom. We had both a directional and a put spread. Mara, we entered on Friday. CGC, we sold $3.50 puts. 30-minute high, you might be able to add. FedEx, we had a beautiful 0 DTE put on earnings, but I still like the weekly. Wide range engulfing breakout. Cenex is aluminum. A lot of aluminum and steel and commodities beat up. Greg showed you that COPX, so I'll be looking at some of these for bounces. It's URG, nice wide range bar, a major support. This is a little uranium stock. It looks higher. Here's URA, another oversold sector. Now Riven has totally been lagging in the EV space. but I like the daily, weekly, monthly. If it can get above Friday's high, that could turn out to be a home run. But they had some good article also in Barron's talking about different EVs and why they're valued so differently. And I forget which one it was. Neo, it's either Neo or XPEV. They said it's like 65% owned by a Saudi company. Or no, it's the lit. Shoot, what was it? It's one that I visited their showroom in West Palm. Oh well, doesn't matter. So these have been on a tear. Riven is lagging. I mean, there's so many beat up stocks. I mean, this is a junk pattern here, but it's a new low failure and going sideways with a price void and a bullish 15. So if this goes to below 24s, it's a trade. We're swing traders. So a lot of junk bouncing. I think Barron's said something positive on GM. Could be a day trade, bouncing a downtrend. Starbucks, there was a favorable article. LEU. Tick 1,000. LEU, I found this in what sector is this? Steel or whatever? And this was the best looking one I found. Made the turn, as we call it, the turn here at the 20 and the 50. So let's watch that 10, 30-minute high or whatever. All right, Mr. I was looking at shorting naked puts. AMD bottom right was a put spread. All the semis here I had gapping over the entry. I had SMH, AMD, NVIDIA, Texan, JP Morgan, Delta, Tesla, all these things were gapping over the open.